Hi, Stan Ehrlich. Wednesday, August 17th. We have a slight down market this morning. Spider is down about 3.5 points. Dow Jones DIA is down about 180, and we're 4.5 lower for the QQQ. And the Russell 2000 I also watch is down 385 at the moment. We gap down slightly, and the gap is opening below the previous day's low or above the previous day's high, and a couple of these indexes did do that, or they opened around the lows of yesterday. But this is important. We went up for about 5 days in a row in a fairly substantial rally and got overbought, as I mentioned yesterday, and in a resistance area, as I mentioned yesterday, and getting to or a little beyond the upside objectives off of a previous head and shoulder bottom. So that objective has been fulfilled. And there is a gap below the market, and gaps are almost always filled. My little saying is gaps are like a black hole in space. They tend to suck the price action back into it. The gap is from about 6 days ago approximately, and in the spider around 10 points lower, 11, 12 lower than where we are. So that's a pretty good break, and I expect that to happen immediately or very, very soon. And it started this morning, I think. And remember, I think this is a rally for 2 months in a bear market, a long-term bear market. So I am expecting a major turn back down. Inflation, if you will, to rear its head again for the underlying fundamental reason. Fundamental reason. And there are other reasons why I'm expecting the market to turn back down again. One of which would be cycle high, and I'll get back to that chart, the cycle, in a minute. So, new lows in the first couple of hours after the opening low across the board. The weakest one seems to be the 2000 at the moment, near its low of the day, with right behind it's the QQQ. The DIA is stubbornly holding on and has not made a lower low since the opening first few minutes, and this is a 5-minute chart, and this is all of them are 5 minutes except for the blue backgrounds. Those are daily data charts, and I always look at my daily data charts first to get a broad, longer-term view of things. And I did not mention that we touched at the rally high yesterday the 200-day moving average. That's considered to be the investor long-term moving average. A lot of money managers watch that. It's called the Dow Theorist moving average as well, and it's generally the longest term moving average used by professionals in any way, shape, or form. I don't use it because it doesn't get crossed very often. It's not particularly important that often, and it doesn't give the signals very accurately most of the time that I like. So you can see it got crossed, and then it went back up again, and went back below it, and then up, and so on, and finally stayed below it for a while. Then we developed this bottom formation, which has now reached its upside objective, so that's over. Not that it can't go farther, but I don't think so. The overbought condition was substantial. Look at my custom RSI at the bottom. It got way up to about 85 almost, maybe even 85. Yeah, to be more exact, it did get up to 85.80. And that is the highest level since the top, or starting of the top, in November of 21, where I got a bearish engulfing on top. Great, ER sell signal. And again here, ER sell signal. That's why those bars are red. So, I'm looking for lower levels. They started essentially yesterday, even though it closed higher. We did have a bearish engulfing Ehrlich reversal in the QQQs yesterday. I rarely get all 4 indexes, maybe a couple times a year, coming up with bullish signals all at once or bearish signals all at once, but having them independently still is important. So the Qs had a bearish engulfing yesterday. That's my sell signal. We had one recently that lasted a couple of days, obviously not as profound as I would like. We had one on the top of the market on November 22nd, which was the high day before this bear move. That is what I love. Those are the super profound ones that produce huge moves. But we don't get them every time. There's another sell signal that worked for a few days. It's good money. There's a buy signal. Enough of the signals. I'm going to leave you with the cycle in the E-mini. This is not necessarily cast in stone. I'm just experimenting here. I picked as a starting point the low we had a couple of months ago because it was stuck out like a sore thumb. It was definitely a profound low, past tense. So dealing with that at first, I can expand and contract these lines with simply a keystroke. This looks very interesting in terms of the lows. Too bad we didn't pick up the COVID low, but here's a bottom, minor, close, good, 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 good. What about the cycle highs? I usually don't pay that much attention to them unless I'm looking for a cycle high. That was good, that was okay, that was not. And in a long-term bull market, your cycle highs just aren't going to work as well as cycle lows for obvious reasons. The trend is not your friend if you're trying to go short. Missed on that. That was terrible. That picked up the COVID bottom when it should have been a high according to the cycle. So I don't like the series of tops. You can hide the red lines if you want and only deal with the lows and vice versa. So there's a little tidbit on the cycle forecaster, which I've been using for a long time. It's the new version of the original cycle finder in 1977. Okay. Thank you for watching today. More tomorrow. I'm going to cover more of the signals that occur frequently at major turning points like I showed you already. The EC, the ER signal, the early reversal signals. Have a great day.